Good morning and welcome. Patriot Radio News Hour, Joe and Jason on this Tuesday. I hope it finds you well out there as, man, all kinds of stuff happening. We're waiting, right? Is Iran, are they or are they not going to attack Israel? I guess we'll wait and see. Donald Trump was on X, I guess formerly known as Twitter, and I don't know, somebody said like 1 billion people watched it. Okay, well, that's pretty spectacular. Everybody wants to know Kamala Harris, right? What is she going to do, right? I mean, because everything she stood for, she doesn't stand for now. So I don't know. It's the year of chaos, so why not? We've got gold near all-time record highs. We've got Wall Street debating whether or not the recession has started. Starbucks, which has been getting brutalized, they made a change yesterday. Fired their CEO, stole, that's probably the wrong word. Hired the CEO of Chipotle. So apparently, if you know how to sell Mexican food, you obviously know how to sell coffee. Starbucks up on the news, Chipotle down on the news. Sure, why not? 800-951-0592. Gold and silver is what we do. Protect your hard-earned, all the things you've worked so hard for. How much do you want to protect and how much do you want to risk? I mean, that's really what you're asking yourself right now. We had budget deficit numbers for July. Man, it was the second worst one ever. But they try to say, well, you know, if this didn't happen and that didn't happen and the calendar, Jason, it was the calendar's fault. See, that's what it was. It was the stinking calendar messed it all up. But once again, the United States digging. Hey, I guess at this point, just keep digging, right? What could possibly go wrong? You're already past the point of no return. I think that's why you're seeing gold skyrocketing because, Jason and I talked about this yesterday. I think we're just going to keep on digging until the digital dollar comes around. AllAmericanGold.com is the website. Jason, we're waiting for tomorrow's CPI, but this morning we got the PPI, that's the producer prices, and that one came in lower than expected. So that's part of the reason why you're seeing a little bit of a rally in Wall Street. The producer price index rose 0.1% of 1% month over month. The expectation was for 0.2%. The year over year, all the way down to 2.2 from 2.7. This is for final demand goods. Big drop in services. The largest decrease going back to March of 2023. And I'm assuming that is people just saying, well, gosh, I normally charge this much to clean the carpets, but I can't get anyone to pay me that, so I got to lower my price. That's kind of what it feels like on the service side of things. But overall, Jason, this is a number very much in line with allowing the Federal Reserve to cut rates. Right now, think about this. This is nonsense. Do you know it's 50-50? For a 50% rate cut in September? Man, if they do 50% or a 50 basis point basis point rate cut in September, you're going to see probably $2,600, $2,700, maybe see $2,700 gold. I don't think that's going to happen, but if the news is like this gets worse, right? Who knows?
I think it's a good chance they're going to drop it that far, Joe, because I think they can only drop the rates a couple times before inflation comes back very quickly, end of this year, but most likely next year. And if they only got a couple shots to lower the rates and try to keep Wall Street happy for a little bit, they may have to do that at the half point, Joe. They might do that.
I'm going to say this. If they do, very good news for the gold and silver market. Unfortunately for Jill, like Jason said, will you just bring inflation right back to the forefront? That's going to be interesting. I think that's really the big debate. We did hear from Home Depot today. I don't know. The consumer just really seems to be in trouble. The retailer says now it expects full year comparable sales to fall 4% compared to last year. Jason, this was a company that the last quarter, they were still saying sales were going to be up 1 or 2% year over year. Now saying they expect sales to be down about 4%. They said that the consumer is definitely slowing down, higher financing costs, saying they're deferring because of a greater sense of uncertainty in the economy. And if you're one of those you're one of those people, you're working for these places that are laying off. Intel lays off 15,000, Dell lays off 12,000, Stellantis is laying. All these closings, Big Lots, Walgreens, CVS. You're probably not in the mood to do any extra spending, and now all of a sudden, even Home Depot saying, hey, we're not immune to this slowdown in the consumer.
Not much money for home improvements, is there, Joe?
Yeah. High financing costs, yeah. How much is that going to be to redo my bathroom? $25,000. Yeah. Probably going to pass on that for now. 800-951-0592. Jason and I will be right back. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Tuesday. How much do you want to keep risking here? That's really the question. Right? How much do you want to leave in that IRA, in that 401k, in your bank account, in your money markets, in your E-Trade accounts? How much do you want to risk? The signs are all there. All the warnings. They've been there. And they keep gathering steam, right? Every month, we get a little more data, a little more data, a little more data. We saw the wobble in Japan that sent every market in the world into free fall. I mean, they lost 12% in a day. In a day. How much do you want to keep risking here? That's really what we're talking about. Gold and silver, it's going to keep you whole. Look at what it's done. It keeps showing you what it can do. Check out our friends over at YRefi. Right, you got an IRA, maybe you got $1 million in an IRA, maybe you got more. You got to have at least $50,000. That's the minimum. But you can get up to 10.25% fixed rate of return. I mean, not correlated to the Wall Street. What does fixed rate mean? Doesn't change. Well, what if this and what if that? No, you take all the what ifs out. You can turn your income on. You can turn it off. You can compound it. You can do whatever you want to do. They don't play games, which is awesome, right? You don't have to worry about, the fine print. Oh, my gosh, like annuities and all the investment guys, right? You don't have to worry about anything. You know exactly what it's going to look like every single month. Kind of a nice feeling, isn't it? Kind of nice. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YRefi24. You got gold, $24.70 right now, Jason, as it's right near all-time record highs. And, of course, we got CPI coming out tomorrow. We're worried about when Iran is going to strike. Could we get the double whammy? We sure could. It's going to be interesting. But I'll say this, for all of you on fixed income, how mad are you? See, these clowns that tell us they care about us. You know how I know they don't care about you or me or anybody else? Do you know what they do for cost of living adjustments for those of you on Social Security? They pick the 3 months where they know it's going to be the lowest historically because that's how they rig the numbers. So June, July, August, you're getting this adjustment. We'll see what tomorrow's CPI is. But just put it this way. All you people on COLAs, for Social Security, you're going to, after last year, you got a nice increase, not getting anywhere close to that this year. But how about this? Auto insurance. Now, it skyrocketed this year, right? You're thinking, okay, it's got to cool off. They're now saying in a new report that says that auto insurance is surging once again. It is up 15% again this year from last year. And by the way, up 50% since 2001. And Jason, they're saying that several more factors, they're expecting insurance premiums to rise another 20% by this time next year. As you know what, I'm going to say this, probably all the electric cars, right? It costs 10 times as much to fix those things. They cost, well, we've seen it, right? New car now, new truck. Even Tesla, they had one of those cyber trucks. I don't even know what to call it. They're the ugliest things I think I've ever seen. But, they had one for $61,000. Those are gone, apparently. They're like, nah, we can't make any money selling that. Now the only option now is $100,000. When they first offered people to, you could put a deposit on one. Do you know what they said the price was going to be? $40,000. I guess they got it off by just a little bit. But this is why, right? Hey, we thought it was going to be 40. It's actually 100. Hey, insurance has got to go up, right?
Insurance is going to be a big problem in the future, Joe. Insurance is going to be a huge problem. I was just seeing some things that are going to be done with health insurance in the years to come. It's government's going to take over insurance, especially health insurance, and they're going to do it through corporations. And it's going to be ugly, and it's going to make people that normally would not want to work certain jobs go to work those jobs because health is going to be such an issue in the near future that, well, I'll go work the crappy corporate job because I can't afford health-wise not to have the job. And the IRS is already setting up ways of corporations saving $9,000 per worker for health insurance. So then the employees of these big corporate conglomerates can just have like $100 or a $10 per month health care premium to garner workers to come work for them. And the one that I was looking at was Tyson Foods. It's going to be one of these. It's you talk about the price of cars, you talk about the price of health insurance, it's all swirling. We're fastly turning into a less and less free country, Joe. And when we say how much freedom can you afford, that is precisely the way it's always been in some respects, but it's really going to be the case in the coming months and years, Joe.
This disaster that's playing out in Florida, all of those high-rise condos, the insurance companies now, hey, they're flying drones over your house, over your business. There's people that, some of these condos, they're not that expensive. They're they're not that expensive. $500,000. And then you're getting hit with a $100,000 special assessment. Well, because all the concrete's gotten chewed up, or the roof needs to be fixed, or this needs to be fixed because the insurance companies won't insure us anymore if we don't do all of these things. It's absolute insanity. California, right? A lot of places, the insurance companies are like, hey, we won't even insure. I don't care. Oh, you live there?
Yep.
Yeah, no.
Yep.
Sorry. We won't even sell you insurance. But this is how big the problem's getting. July. Now, I know they did everything to make it appear like, oh, no, it's okay. If we just used the Mayan calendar, things would have been different. the second worst July ever. Revenue, listen to this, June revenue, $466 billion. July revenue, this is government tax revenue, $330 billion. What? Boy, that indicates to me, Jason, a lot of people stopped working. I mean, because let's face it, most of the tax revenue is FICA, right? Payroll tax. By the way, government outlays, don't worry. You know, it was only $573 billion. You know, it's fine. What could possibly go wrong with that? By the way, that was $70 billion, actually $76 billion more than last July. The deficit, $243.7 billion. Yeah, so that's $1 trillion right there. Here you go. Kind of right, close to $1 trillion every 100 days. The second highest ever, of course, the only month higher, the July 2021 of COVID. And with 2 months left in the fiscal year, Jason, right? Here we go. Here's another $2 trillion. Just tack it all on there. By the way, the $581 billion in this 6 months, that's the best 6 months because you've got tax revenue, right? You got tax season, but just so you know, that's the highest going back to COVID 2021. So, Jason, not good news on debt. And then how about this? Really, some good reporting out of Kitco. The decline of the dollar. We've talked a lot about this. See, that number I just talked to you about, that July number, there was no emergency. Right? We're not in a recession. Right? There's no COVID shutdowns. How in the world can you run a $250 billion deficit for a month? You do that every month, that's $3 trillion. Right? You're starting to figure things out. Well, guess what? The rest of the world is seeing it, according to the latest information about the dollar. Global reserves stood at 58% in the beginning of this year. So remember we talk about all these countries buying gold, right? We talk about China buying gold, India's buying gold, everybody's buying gold. What are they selling, right, to buy the gold? They're selling something. Are they selling their own currency? Are they selling euros, yen, pound sterling, or are they selling dollars? Well, according to the Atlantic Council, from 2002, the U.S. global reserve stood at 72% in 2002. It is now down to 58%. So we're starting to get a picture of what it looks like. Here's the problem with this. They were saying, hey, early on, 2003, 2004, 2005, there was a very little going on. It has been recently where this number has really begun to pick up steam. Remember, we're on the third year of record central bank gold buying. But, Jason, it is very clear as the path we're on that the United States, if this path continues, before 2030, the dollar will be less than 50% of the assets being held by these countries out there, which is a huge shift. I mean, think about it. We're at 72% because all these countries had to buy everything in dollars. Now they can buy it pretty much with whatever they want.
Yeah, the dollar is definitely not as sought after, but it's still there, isn't it, Joe? It's still a major thing. So the damage or the changes to the economy worldwide are kind of hard to predict, isn't it, Joe? Because we know they're not going to stop using dollars, but they are definitely coming to a screeching halt in many areas of the world. So I guess, Joe, I think this will lead to the unpredictability of how bad the dollar could be. And, of course, we know that countries cashing in their dollars and moving into other currencies means, more dollars sloshing around, which then means gold and silver and things like that will go higher. So I just don't know the level, Joe. Here's the thing. It's kind of interesting because at what level and how quick is it going to happen is really the question.
Yeah, the thing that they're noting is it's picking up speed, right? The decline. But we're seeing this in the Treasury auctions. Listen, at 72%, we had no problem selling debt, right? At 65%, still had no problem. All of a sudden, though, look at this. We dropped below 60%. And now all of a sudden we're starting to have problems. And at what point do we have one of those where 800-951-0592 to give you an idea of how quickly things are coming. China has developed its own SWIFT system. It's only been around for about a little over a year. As of May of this year, they've added 62 more direct participants. These are banks. And they have a total now between what they call direct and indirect banks working with China's SWIFT system, which is it's called CIPS, by the way, China Cross-Border Interbank Payment System is what they're calling it, CIPS for short. Jason, they now have over 1,500 connected banks. SWIFT has 11,000. So right now, China's already in a little over a year has added over 10% of the banks that are in SWIFT participating in China's banking system. And the bigger this share grows, right, the less need there's going to be for dollars. So it's definitely something where they're saying, hey, not only are all these countries buying more gold and using dollars to do it, they're starting to switch into the China system, which allows them to basically pay for things, whether it's in, Brazilian reals or Chinese renminbi, right? They can use things other than dollars. To Jason's point, it's not like the dollar's going to zero. It's not. It's not gonna. The problem is we're already struggling at 58% because of the amount of debt we're carrying. And now this debt, we're on this explosion of debt every year. We gotta roll over more and more debt, and yet at the same time, there's less and less need for dollars. Jason, I think this is why you're seeing all of these countries heading for gold, because they know that, listen, the dollar, I think, is getting ready. Its days are numbered. I'll just say it right now. The dollar's on the clock. We'll come up with some digital currency, get ready for massive taxes and all the less and less privacy. But this is why you buy gold. Listen, I'm going to give a great opportunity because I really think tomorrow's number is going to come in light. Good possibility that there could be a strike with Iran and Israel. We'll see. There's a lot of factors that lead us to believe that we're going to have a higher gold price. I'm going to give you two different gold items. One $20 gold piece. So this is going to be the sale of the week by far. 1 day only. $2,650. $2,650. I mean, you got gold at $2,470. They said, the higher this goes, to be able to buy this, it's only $180 over spot. That's nothing on almost $2,500 gold. Take advantage of it while you can. Pay less while you still can. And then for those people, I get a lot of people, come on, Joe. I have $2,650. I get it. 1/10 ounce American Gold Eagles. We're the cheapest around at like $305. We'll tell you what we're going to do. $295 on 10th ounce American Gold Eagles. I mean, you can't find them for under $300, $325, $335. $295 on 10th ounce. Remember what it was a week and a half ago. They went out of stock. They're back in for right now. So a little bit for everybody. $20 gold, $26.50. 10th ounce gold, $295 at 800-951-0592. And then, I guess we got to talk about it. The U.S. Mint, there's a law that says that the U.S. Mint needs to buy all their gold from companies that mine in America. According to the Treasury Department's Office of the Inspector General, apparently the U.S. Mint not only was not buying gold from U.S. supplies, but apparently Jason tried to cover up the fact that they weren't buying gold from U.S. companies. Matter of fact, going back to 2019, that the U.S. Mint was buying gold refined from sources from illegal mines in Colombia, South America. Right? Put it this way. Apparently, the Mint was, buying gold from places that they knew were being mined illegally, right? Which is usually what? Either drugs or, Al Qaeda. But apparently, it's okay for the government to do it, Jason. Just nobody else can.
Yeah, you can't just go digging anywhere you want to get gold. That's for sure. There's a lot of regulation, right, Joe? There's a lot of red tape before you can just go digging up gold anywhere you want to, for sure. But I was listening to you on that gold pitch. I mean, we got record high gold prices, and I wanted to say this, Joe, which is interesting. A lot of people say, "Wow, gold's at record highs." I don't think I should be buying at a record high. And I always find it funny that they try to compare it to Enron stock, right, or Blockbuster stock. Gold is not a stock. It can't collapse and become valueless, right, Joe? So I would say to all those unfortunate people that thought that gold was too high at $300 way back when, Joe, when you were selling it, or $1,000. Gold's at record highs. I don't know about this. Maybe I'd better wait till it dips down. You may not get that. You may not get that chance. I mean, just look what Joe just mentioned on the last thing there. About illegal gold producing. Good for them, not for you. Somebody wants the gold, Joe, really bad.
Yeah, it's really shocking that things like this could happen. But again, why would it happen? Why would that happen? Now, could it be an accident? Maybe. Or is it more likely that, hey, there's just not a lot of gold out there, and Jason, we just got to buy it from wherever we can buy it. I mean, that kind of seems like more like the reason why something like that would happen versus any type of, oh, man, we just made a boo-boo and bought illegally mined gold. Yeah, I'm not buying it. Big Radio News Hour. Joe and Jason will be back after the break. 800-951-0592. Today's specials, two really, really good ones. $20 gold pieces, $2,650. You got gold at $2,470, and we've got CPI coming tomorrow. On top of that, 1/10 ounce American Gold Eagles at $295 at 800-951-0592. That's $50 off on $20 gold pieces, $10 off on 10th ounce American Gold Eagle. So $2,650 on $20 gold, $295 on 10th ounce American Gold Eagles. In news out of China today, and this may be another one of these things to upset the apple cart. Huawei. Remember, that's the tech company. Remember Trump and all them, right? We're throwing them out. We're not allowing them to buy the NVIDIA chips. Well, guess what? According to the Wall Street Journal, they're saying that Huawei is testing the latest processor that they call the 910C, which they've told customers is comparable to NVIDIA's H100, which debuted last year. That's the chips they're all buying and is unavailable in China. Jason, they didn't think the Chinese would be able to pull this off. I don't know, but according to the Wall Street Journal, apparently NVIDIA is going to have competition from Huawei, and they say, hey, we've done it. We've pulled it off. We didn't even need your help. Now, I don't know if that's true, if they stole it or what they did. But, Jason, they figured it out.
Yeah, it's very interesting. Well, when it comes to AI, I just feel like there's a lot of holes there, Joe, a lot of holes. And so figuring it out might be, well, we figured out it isn't exactly what we're telling you. You guys don't know either. Maybe that's what it is, Joe. Maybe it's like, yeah, we know that you're
just the fact that they're probably going to be able to produce it less than NVIDIA, right? And, right. That's been one of the big stock plays here, and now all of a sudden, China says, hey, and according to the Journal, they're saying that their chip outperforms the NVIDIA chip. I don't know, but we'll have to wait and see. But a very interesting announcement, because this wasn't supposed to happen, right? China, wasn't supposed to be able to do this without help. And apparently, they, like I said, I don't know how they did it. Did they do it on their own? Did they still? Does it matter? Because it's here.
Right. And that's why I said, I mean, whatever AI is going to be, I don't think it's ready. And so China could very well not even have it at all, but say, hey, that's what I'm thinking. This is read between the lines for me. Hey, you guys got nothing either. So we've got what you got, which is a falls short of what we're promising. That, to me, makes a lot of sense, Joe. China can come up with something that's broken that America is falsely claiming it works the way it works. So NVIDIA is going to be... It's going to be the elephant in the room when the markets start to collapse, because if people start to have doubts about what their abilities are, it's just a monster of a stock. Everyone's hinging all their hopes that it's the next internet, it's the next iPhone, like it's the next big tech thing that's going to keep the markets moving forward and have some sort of GDP that makes sense. And if it fails or it's not ready, like the dot-com bubble, Joe, I mean, look, it looks like we're heading for another dot-com type bubble anyways, isn't it?
Oh, I know.
NVIDIA could be the tip of the spear.
We'll have to see. Could be a good point, right? Now that China's like, hey, we've got one too.
We've got it too. Yep.
Right. Paramount just announced it's going to be laying off another 15% of its U.S. workforce. So the layoff, they keep continuing here. And not to be outdone, the Treasury reported that the federal government has amassed $142 trillion in debts, liabilities, and unfunded obligations, which, by the way, would wipe out 93% of all the wealth that's out there, which sounds about right, Jason, right? There's going to be about 7% of lords and 93% of peasants out there. It's nice, though, that the Treasury at least is willing to admit that. The problem is, what does next year's number look like? That's kind of the problem. Oh, this year's 142. Next year, it's going to be, what, 150, 155? It grows exponentially every single year.
Yeah, I don't see how it's going to stop. It's just the system, right? That's the way it's designed. So, yeah, it's the interest on the debt, Joe. That's always going to be that's the thing that's growing out of control. That's why they have to inflate their way out of it. The only way to try to hope to keep it somewhere what it is just to inflate their way out. So, good luck for those out there that don't have things of value saved up, because the poor are going to get poorer, the rich are going to get richer, and the middle class is going to disappear. We've been saying it for people have been saying it for decades, but look where we're at versus a few decades ago. The house is what, $500,000 for a starter house? That's not middle class.
That's not middle class, right? It's a lot of cities now, it's $1 million for a starter home. By the way, the Treasury did admit, okay, the debt right now actually really $42.9 trillion. And then unfunded social insurance obligations adds the $104.2 trillion to get to the number. But kind of interesting that they've got to release one of these reports that kind of wink, wink, nod, nod. Okay, we really are $43 trillion in debt, but let's not say that. Let's say lower numbers instead. Patriot Radio News Hour. Joe and Jason wrapping up a Tuesday right after this. (800-951-0592) Patriot Radio News Hour. Wrapping up this Tuesday, a huge deal in front of you today. $20 gold, $2,650. Yesterday we gave you that shot at the 10s, right? Did you see what gold did? Gold just went up all day. After we got off the air, everything. You know what a $10 gold piece is today? $13.80. I mean, that was $45 higher than what it was yesterday. I'm taking $50 off of these 20s today. I don't know what the number is going to be. I have no idea. But don't be surprised if tomorrow we're like, hey, those 20s, they're $100 more. Don't be surprised. I'm not saying that's what's going to happen. But, Jason, that's been the pattern that keeps happening as we watch, and we've been telling everybody all year, why is gold on this huge move? And the answer has been really simple, right? Because the boom and bust cycle has been slowing, right? The boom has been slowing month after month after month after month. And we talked about the Federal Reserve. First, they're going to take down quantitative tightening, which they did. Then they're going to start cutting interest rates, which looks like, by all accounts, is going to happen in September. And now they're talking about possibly cutting 50 basis points instead of 25 basis points. On top of all the debt and other chaos, Jason, it really is something where it's very easy to see. I mean, everybody's talking $2,700 gold this year, $3,000 gold next year. $2,650 is a great opportunity at 800-951-0592 on $20 gold. Don't forget, that's the 1 ounce private gold. You can buy it, sell it, trade it. Don't have to worry about 1099s and Social Security and all that other mumbo jumbo. or the 1/10 ounce American Gold Eagle, the golden dime, because it's the size of a dime. It looks like a dime, but it's gold. It's 1/10 of an ounce of gold, $295. You can't go wrong either way. 800-951-0592. And then I guess, Jason, we'll just wait. We'll see what inflation on the CPI side of things says tomorrow. And then, of course, what other shoes drop tomorrow? That's the thing we don't know. Today, it was Home Depot, Starbucks, and Chipotle. What shoes are dropping tomorrow? I don't know.
Seems to be a daily and weekly situation, Joe. So and gold just keeps moving. I mean, I've heard many guys on the internet saying, "Well, gold it'll pull back. Yeah, it's going to pull back." And nobody knows for sure, Joe. Right? Nobody knows for sure, but it sure seems like this is a cycle that's just going to grind upwards. And the inflation isn't gone, and the rate cuts look like they're coming, and gold looks like it's got a lot of movement upwards for the rest of the year, Joe. That's just the way it seems.
Yeah, and gold's done this with a strong dollar. I mean, really. Yep. I mean, it's just started to weaken, but gold's up. I'm not kidding you. 29% from this time last year. And again, it just tells you, right, how undervalued it was. Remember how it took a couple of years to get to through 2000. I think this is the same thing. I think we're going to see a run to 3,000 before we really see anything substantial here. 800-951-0592. Jason and I are coming right back with the half-empty cup.